This year, GasBuddy reports that the nation's average gasoline price has seen a weekly drop down about 4 cents, but the national average, still up 17.5 cents from a month ago. With those prices still seemingly on the rise, Ernie Burns from Burns Estate Planning joins us with the effect that it could have on the economy, on your personal finances.
Yes.
So, good morning to you. Prices, have been on a streak going up. What's going on?
What's going on is really inflation, just bopping in, which we'll talk about in a minute. But overall, OPEC controls 50%. We were exporting oil 2 years ago. Now we're importing oil. So therefore, we're limited license, limited production is causing us to be more dependent on OPEC. OPEC is keeping the prices up.
And, you've got the war in Ukraine, which is a factor in it.
Yep.
Certainly, there are Republicans who would argue that the oil drilling limits that the government has in effect are having an effect. This is the time of year, though, that prices should be going down, generally.
They should be, and the big thing about it right now is China's opening up right now. Europe's still dependent on Russia, and OPEC is controlling
So when China
everything.
opens up, meaning
their demand is basically
demand.
pulling up more oil. Yep.
We have made some progress in fighting inflation. That's why the Fed raised interest rates by only, a quarter of a point this time around. How much, if this were to continue, how much would that threaten that progress?
It would threaten and possibly even rise it again. The reason being, think about it, when fuel prices go up, it costs more to get goods and services to stores, to plants, to retail stores, to grocery stores. Therefore, those prices are going to stay up longer, which causes inflation.
So let's talk about the personal level for people. Obviously, if you're investing in energy stocks, which were a terrible buy for about 10 years, things are pretty good right now. But in the general focus, or world, what's it looking like?
Well, in a bear market, energy stocks and bonds do really well because they're more dependent. They have dividends, they're paying interest. But in a market that is unstable right now, they're doing well, but you got to watch out and make sure that you're investing correctly in a sense of look at the fundamentals of the company. You just can't be very sporadic in buying investments left and right.
For a younger person who's just kind of in the market in general, and you have time to recover, don't panic. But for an older person who's looking at retirement income, you have to really pay attention.
Right, yeah. If you're 20, 30, 40 years old, these stocks and some of these companies are on sale right now because you're not using that money for 10 plus years. But if you're about to retire, you better be very, very selective and use the fundamentals before you select those individual stocks.
So with this new pressure that we're starting to see from gas prices, once again, from crude prices, what do you see for the markets in 2023? Are we looking at a repeat of 2022?
No, I don't think so. I think at the end of the year, the market will be favorable. It will be bullish again. We have to work our way through this whole summertime with these gas prices. Once that occurs, the Fed's pause interest rates, that will jump tech stocks. And then when it pauses interest rates, you'll see the economy starting to come back.
That's more optimistic than some of what I hear on some of these financial channels. So I hope you're right about that.
Well, I predicted it.
And you've been right before, so that's good. All right, thanks, Ernie. We appreciate it.
Thank you.